Hey everyone, this is Scott Wohlers with River Place Capital. It is Thursday, May the 20th, and just wanted to talk a little bit about what we saw in markets last week, what we've seen so far this week in the market, and kind of where we see markets moving forward from here. And as we finished the week last week, the S&P 500 finished the week negative 1.6% for the first down week in a couple of weeks. The small and mid cap indices were off a little more than that, but markets are still up very healthy year to date. And as we entered into this week, it was very clear that the market had entered into correction territory. And wanted to talk a little bit about what has caused the correction in the marketplace, what is driving those factors, and is the correction over, or should we expect more volatility in the marketplace? So really what started happening last week is as we got the CPI numbers in, as we were talking about the inflationary numbers, fears of higher inflation have really been the catalyst for the market sell-off in the last week. And you've seen it particularly in the growth names, and you've seen it, the NASDAQ, which is comprised of primarily growth companies, has been down and negative 4 consecutive weeks. And so what you've been seeing and what we've been talking about is when you have the higher inflation, it causes the Fed to move interest rates maybe sooner than were anticipated. And those growth companies, their margins get squeezed and they can't stay at those high PE ratios and multiples as they can't grow, and the cost of capital gets more and more, and they can't get to those growth levels that they're priced at currently. And so you've seen a lot of selling, and we entered into this week and we saw some pretty down days, of over 1% down days in all major indices this week. And yesterday it really does look like we made a bottoming of this correction. You really saw it at one point. The Dow was down over 500 points, but by the end of the day the NASDAQ finished essentially flat, and a lot of your high growth tech names that have been selling off over the last month really were actually positive yesterday, and you saw a lot of those names that had been beaten so down kind of have a rebound and bounce back. So that is classic bottoming behavior. And what you also saw yesterday that was classic bottoming behavior is you saw that investors were selling everything. Bitcoin was down 30% at one point, down to $30,000 a coin. Now it recovered and bounced back, closed at $38,000 a coin for the day. The treasury yields were down, all markets were down. That's classic when we've reached the bottom. Everything is sold off for a little bit, and then the buyers step in and take advantage of a buying opportunity, and that's classic what we saw yesterday. So at River Place, we really do believe we've seen this consolidation correction, this rolling correction that started in the NASDAQ, then moved to the S&P, and then the Dow. We really believe we've seen the bottoming of that, and we really project markets to move a little bit higher from here, or if not flat until we get to the earnings. And the other thing to consider and talk about is the market itself. As we've gotten earnings in from corporations, the S&P 500 is now trading less than 20 times a forward PE multiple, which historically is not expensive at all to be in the stock market. So we entered the year at above a 20 PE handle on the S&P 500, which is more pricey and is more expensive than where we sit today, even at these elevated levels. So as always, if you have questions about what's going on in your individual portfolio, ways that we can help you, feel free to give us a call. We're easy to talk to and love to talk to you about it. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks.